continual rises to the consumer price index and some inflation there, along with discussions around the April NOPA report. Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how's it going?
Good. How are you today, Will?
Oh, I'm doing all right. We've had a fun last couple of days. Our freezer went out down here, and had to go buy a cooler, pack it with ice, put in a maintenance request, and hopefully the new freezer's here sometime today, so we don't lose a lot of ground beef.
Well, that really stinks, literally and figuratively, I guess. But
Exactly.
it's pretty warm right now, or it's warming right up. So it's not a good time to lose an air
No.
conditioner or a freezer.
Exactly. But speaking of warming up, the Royals are warming up. Things are getting hot at the ballpark, and it looks like you're getting ready to take a trip.
Yeah, did you see my shirt there? So heading over to the game tonight. Big Royals fan, have been my whole life, and we've got a team to follow this year. I always watch the Royals even when they're not doing well, but we won our 30th game of the season last night. We didn't win our 30th game of the season until mid-July after the All-Star break last year. So big turnaround in the season.
And I think I saw somewhere last time the Royals were 10 games above at this point of the season. They won the World Series.
That is correct. Back in 2015, yeah. So
Watch
uh,
out.
yeah, high expectations there, Will. I don't know if I've got that high of expectations, but certainly it's been fun to watch.
Well, speaking of fun to watch, there's been some return of a little bit of support into different parts of the market, looking at soybeans and wheat. Giving a quick rundown here on what we saw on the last week or so. The July 2024 corn crop was down 12 cents at 460. December corn down at 11 cents at 484. July 24 soybeans up 29 cents at 1248. November soybeans up 4 cents at 1216. Soybean oil on a cents per pound basis for July up a dollar, up 1.17 cents at 46.32. Soybean meal by the short ton for July up $12.50 at 374.10. And then looking at those wheat contracts for 2024 July up 1 cent at 688. 2025 July wheat contract up 10 cents at 745, and then that West Texas Intermediate crude oil contract for July up 70 cents a barrel at $79.30. So, Ben, a lot of adjustments, support pretty much coming everywhere except for within the corn market. So, what's your main key takeaways looking at the shifts on the week?
Yeah, so as you were reading that down there, I continue always to wonder how much we're hiding in these weekly change numbers. That wheat number there of old or current crop wheat up 1 cent on the week or change over the week. It kind of avoids the limit up or the 40 cent gain that we saw on Monday of this week. It wasn't quite 40 cents, but it was the limit at one point on Monday. So we had seen some deterioration heading into the weekend, some strong price action to the upside on Monday due to some production issues. And then this morning, looking at the markets as we do this on Tuesday mornings, we're having a little bit of a turnaround Tuesday. The crop progress and conditions report yesterday providing a little bit of a bearish sentiment heading into our Tuesday here. So there's always a lot of things that happen within these numbers that sometimes I wonder if we're covering them up doing weekly changes, but there was a lot going on this week, I guess is what I should say.
Well, Ben, it's always kind of interesting to see the effectiveness of a graph depending on how far you zoom in or how far you zoom out, and that's just
Sure.
one of those things where you kind of do lose those daily changes. But I think in the scope of things, it still paints somewhat of a picture there. Ben, I want to start off today's conversation really hitting on the most recent NOPA report, the National Oilseeds Processors Association reports. It was pretty bearish to the soybean market and the soybean complex, looking at a crush volume of 166 million bushels, and that's down below expectations there. But looking at the market today, we're still seeing some support within the soybean complex there. So, what are your thoughts coming out of that most recent NOPA report?
Yeah, so it did have some different components to it that were supportive to the product sector, so the soybean oil and the soybean meal prices, but was a little bearish to our overall just whole soybean market. So In April, NOPA members crushed about 166 million bushels of soybeans. That's down from 196.4 million bushels in March, the previous month, and then down from 173.2 million bushels last April. So this was a pretty low number. It was well below trade expectations. Fell almost 8 million bushels below the lowest pre-report trade estimate. That really changed the trajectory of where we've seen cumulative soybean crush going. Now, there was a lot of plants that were down for maintenance in April, and so I don't think this is overly too concerning in terms of the soybean market, and especially the crush sector just fell completely out of line. I think we had a lot of seasonal maintenance that happened. But this does follow a general theme that we've kind of hinted at in recent weeks, that we've just seen these dynamics in the soybean oil, and especially the crush, how it feeds into the crush market, just really kind of slow down, right? All this talk about how we were going to have to grow 30 million acres of soybeans to supply the renewable diesel market, and how we were going to have all this crush capacity come online to kind of provide for that market, has really kind of deteriorated in a lot of ways. It's still there, but we grew faster than what the demand source was signaling to us, and we've seen some of these companies pull back on their plans to expand or build new renewable diesel facilities, and it's starting to trickle into the crush market as well. So a little bit of a bearish report, but in that vein, I go back to when we crush that small of a volume of soybeans, it does provide a little bit of bullish support to the components market, and that's why we saw soybean oil and soybean meal up on the week.
Well, and it's one of those things too where it was below those pre-report expectations and quite a bit below. So sometimes I guess economists are kind of like weathermen; they do get it wrong, and that's all right. But it was coming off of a record type of report. So, I guess that even makes the gap look that much wider. But Ben, I want to jump on the most recent numbers coming out of the producer price index and the consumer price index, both looking at I guess higher than what would be preferred when looking at the level of inflation that we're seeing. So, between or from March to now, I think was a 3.4% year over year level on the consumer price index for inflation there. What is this signaling to you when it comes to maybe how the Fed might operate, looking forward, some of these signifiers, and moving forward on the general economy? How is this affecting agriculture?
Sure. So you are right. We did see new inflation numbers last week. The year over year numbers were that 3.4%, which actually has shown some improvement in different sectors. And so we don't have, or we weren't seeing the strong reinflation signals that we saw like in March, when it really kind of caused that pivot away from a dovish position in the Federal Reserve that we might see 3 interest rate cuts here in 2024. March really kind of sparked the market that we might not see any interest rate cuts. Some of these consumer and producer price index levels still showing higher than desired inflation year over year numbers, but maybe starting to trend a little bit in the right direction again. That's introduced, or the expectation that we will see at least one rate cut in September of this year back into the market. I remain on the fence. I've often said, and you've heard me say it, I didn't think we would get a rate cut in 2024. I actually now would price in maybe a decent chance of one in September. But if we don't get one in September, I don't think we get one in 2024. To me, the edge still favors that we don't see a rate cut, because the Federal Reserve would like to see these prices continue to make product and don't want to pivot too early and reintroduce that inflation that we kind of saw pop again in February and March. So the numbers started to head back in the right direction again here, but still more work to go.
Ben, another thing that you noted it in your recent write-ups, looking at some managed money behavior on, I guess, trader behavior. So there's been some buyback on some futures and options for corn and wheat. What does this really do to the market? What are you watching here when you see this happen? with some short covering operations.
Yeah. So since managed money traders use commodities a lot in their balanced portfolios, they tend to be long the commodity market when inflation is running high. Basically, they own commodities when the anticipation that inflation returns. They tend to be very short in commodities when we end up in this period where inflation is slowing. It's still growing, but slowing, right? And we saw that. All three of the commodities that we talk about, plus some of the other commodities that we talk about every once in a while, all had very large net short positions, and corn and soybeans were hitting almost record net short positions. We've, as a society, I shouldn't say we because I don't trade managed money, but those short positions have been unwinding the last couple of weeks. Last week, so not this most recent week, but the week prior, we saw near record short coverings in corn and record short coverings in soybeans. And that just kind of continued again this week, where we saw managed money traders continue to take short coverings of Chicago corn and Chicago wheats. When we think about the last 4 weeks as a combined total, the corn position has unwound 208,000 contracts, a little more than 208,000 contracts, to get back to what I would consider more of a neutral position. And so we've seen some big changes, and that's kind of complemented this month and a half rally that we've been witnessing, or month rally that we've seen here across all three markets, corn, soybeans, and wheat. I think we continue to see managed money traders maybe continue to buy back wheat contracts and maybe end up in a net long position in the next couple of weeks as well.
Yeah. And looking at just kind of the operations of these things, maybe for some beginning or novice, I guess, market watchers, looking at what some of this means. So you're seeing, the short coverings by a lot of these managed money firms. So they're buying back into the corn and wheat markets here. Whenever they took a short position, they sold off a lot of contracts that they needed to buy back. So now you're seeing them return back into the market, just kind of as a 40,000-foot overview of what we're talking about here for those of you who would like to learn a little bit more about the market operations. But Ben, looking forward into the following week, what's really piquing your interest when it comes to what ranchers and farmers need to be paying attention to that could be moving the market?
Well, so it's a rather quiet week. The big thing is actually a break, a holiday next Monday, Memorial Day, and so the markets will be closed. And so just be aware of that. Crop progress report next week will come out on Tuesday instead of Monday. Still the same time frame, still reporting on Sundays, or still as of Sunday evening. And so just be aware of that. When we think about what's going to move the markets in the next couple of weeks, it's going to be probably those crop progress and conditions reports here for another week or two.
All right, Ben, it's always a pleasure having your knowledge and information here on the program. Viewers and listeners, if you'd like to learn more about us and what we do, or our sister program, the weekly livestock market update, you can do so at brownfieldagnews.com. Ben, thanks again. Have a good time at the Royals game. I'm Will Robinson on Brownfield.